Okay, so when you think about a real global powerhouse company today, what actually defines that? Is it just about being, massive? Or is there more to it, like growth or innovation or something else entirely? Today, we're going to take a deep dive into the Forbes Global 2000 list. It's that big annual ranking, of the world's largest public companies. And our mission for you listening is basically to unpack all this info, pull out the really key stuff, and give you a shortcut in understanding who these corporate titans are and what they signal about the economy. We'll get into how they even make the list, some surprising things about who's winning, who's maybe slipping, and the big trends shaping things right now.
Yeah, and the first thing to really get is that this Global 2000, it isn't just about one single number. It's meant to be, holistic. The method uses a composite score. It looks at four main things: sales, profit, assets, and market value. And these are all based on the latest 12 months of data, specifically using closing prices as of April 25th, 2023. So it gives you this unique snapshot. It's not just market cap, not just revenue.
And that snapshot, the scale is just wow, it's mind-boggling. You've got 2,000 companies, right? And together they account for something like $191 trillion in revenue, plus $56.9 trillion in assets, $12.5 trillion in profit, and $82.2 trillion in market cap combined. Huge numbers. But here's what really stands out: the concentration. The top 100 companies alone, they represent 40% of total sales and 30% of the market cap for the entire list. So power is definitely packed at the top.
And geographically, if you look at where these companies are based,
right,
well, the U.S. is still clearly dominant, 617 companies. But China, including Hong Kong, holds a really strong second place with 317 companies. That U.S.-China dynamic, it really sets the scene for a lot of what we see globally.
Okay, so let's zoom in on those top names then. J.P. Morgan Chase, number one again.
Third year running. They're sitting on a massive $4.4 trillion in assets.
Wow.
We did see Saudi Aramco slip just a bit, though, from number one last year down to number two.
Ah, interesting. Maybe some energy market shifts reflected there.
Could be. But you still have the big tech players right up there, too. Yeah. Amazon's at number 5, Microsoft is prominent, and, of course, those huge Chinese banks are still firmly in the top 10. Industrial and Commercial Bank of China at hashtag 4, Agricultural Bank of China at hashtag 8. They're fixtures.
Right. But the one that really jumped out at me, and I think it says a lot about maybe how value is changing, NVIDIA. Their jump was huge, right, up to number 47.
Exactly. NVIDIA's rise is fascinating. It's not just about chips. It highlights this shift. Banks, the traditional powerhouses, they're built on tangible assets, steady revenue streams, often NVIDIA. A lot of their value is tied up in IP, AI leadership, future potential. It's different. It really signals a pivot, sort of from valuing sheer industrial scale to valuing technological leverage. That's the key insight, I think.
So it's less about the factories they own right now and more about the market expecting them to just fundamentally change things, scale up without needing those same physical assets as, say, a bank. Is that the different kind of valuation?
Precisely. Investors are betting on that future disruption, that innovation potential, maybe more than just historical stability built on physical assets. And it creates this really interesting contrast when you look at industries overall. Banking is still the most represented industry, 328 banks on the list, and a third of the top 100 companies by assets are financial institutions. Now, their profits have surged recently, mainly due to higher interest rates. But interestingly, their market values haven't quite kept pace. They seem to be lagging a bit, whereas tech companies, powerful as they are, sometimes look almost undervalued by market cap compared to the banks, which just underscores that difference in how assets are perceived.
Yeah.
Oh, and speaking of new players, some of the highest-ranked newcomers this year included Sappi Fatten and WestRock, so movement across different sectors.
Okay, so we've got the big picture, the U.S. dominance, banks versus tech. But let's dig into the regions. China, for instance. You said second biggest representation, but what's the actual story there? Is it all smooth sailing for them?
Well, actually, China's picture on the list this past year has been, let's say, a bit cloudy. The total number of Chinese companies, including Hong Kong, it actually dropped from 351 down to 317 year on year. And the scale of the pullback is pretty stark. Aggregate revenue for Chinese companies fell by, wait for it, $87.7 trillion.
Wow, trillion.
Trillion, and profits dropped by $62 trillion. I mean, that profit decline alone is massive relative to their economy. It shows real pressure. We saw it in specific cases, too. ICBC, the big bank, their profit dropped $7.7 billion. Bank of Communications, down $2 billion in profit. Sinopec, the oil giant, lost $800 billion in sales. Even consumer companies felt it. China Menu Dairy's profit fell by $85 million, partly linked to an Australian subsidiary issue.
Those are some seriously big downturns, so a generally tougher year for many big Chinese firms. But was it completely uniform, or were there some, bright spots? Any companies there actually pushing against that trend?
That's a good question. It wasn't all negative. There were definitely outliers. BYD stands out, the EV maker. They bucked the trend completely, jumped way up to number 87.
Ah, the electric vehicle surge.
Right, and Geely's EV brand, Zeekr, apparently overtook BMW in luxury EV sales within China. So shifts happening there. But what's maybe even more surprising are some of the new Chinese companies on the list. You've got Mixu Group, that's a massive bubble tea chain.
Bubble tea, seriously?
Seriously. And Popmart International Group, the toy company, also on the list now. And Haiti, another tea brand. It shows that growth isn't just the old industrial giants anymore. Consumer markets are creating these new powerhouses.
Okay, from state banks to bubble tea and designer toys. That's quite a range. Really shows you where value popping up. Okay, let's shift gears. What about Southeast Asia? We hear a lot about growth potential there. Is that showing up on the Global 2000?
Yes, definitely. Southeast Asia is really starting to make its mark. You're seeing growth driven by more foreign investment, more diversified trade. Yeah. They're aiming for a regional GDP of around $4 trillion by 2024, which is ambitious. In terms of companies on the list, the Philippines actually contributes the most from the region, 84 companies. Thailand is next with 43.
84 from the Philippines. Interesting.
Yeah. Key players include Aboitiz Equity Ventures from the Philippines, biggest by market cap in the region. Petronas from Malaysia leads in sales, and Bangkok Bank from Thailand leads in profit. So different strengths across the countries. It's becoming a real economic force, maybe a bit quietly.
And are there specific examples? Companies making big moves?
Oh, absolutely. Singapore's DBS Bank made a huge leap. They went from hashtag 113 right into the top 100, landing at hashtag 82. That's significant.
Definitely shows financial strength.
Mm-hmm. And you saw mining firms like Sumatra Copper and Gold with big profit jumps. Commodities are strong there. And Vietnam's Vingroup, they had a 43% sales increase and a good profit gain. So growth across different sectors is visible.
Okay, so a lot of positive momentum. Any headwinds, though? Did any companies fall back?
Yeah, it's not universal growth, of course. There are always challenges. A couple of Malaysian companies, Simi Darby Plantation and Sapura Energy, they dropped off the list this year. It's just a reminder that even in growing regions, individual company fortunes can change.
Right, makes sense. Okay, so from Southeast Asia's rise, let's jump over to South Korea. Always seen as a hub for innovation, especially things like robotics, SI. How's that playing out on the list?
South Korea's focus there is really intense, and you see it moving from R&D into, real-world stuff. LG Electronics, for instance, they're developing this AI brain for their C-alloy robots, the ones for serving, carrying things. Samsung took a massive 95% stake in Rainbow Robotics, which is big in humanoid robots.
95%.
Yeah, big bet. And you have collaborations like Hyundai Motor with Keist. They've developed things like the Hubo Pedalbot, walking robots. It's quite advanced. But the really big news, maybe, is Hyundai's acquisition of Boston Dynamics.
Ah, the spot robot people.
Exactly. They bought an 80% stake. And the plan isn't just labs anymore. They're talking about deploying 1,000 spot robots globally soon, maybe 1,000 to 2,000 more by 2025. Plus, they're putting serious money down, $5.8 billion for a plant in Atlanta. That shows real commitment to scaling up.
And the wider economy there seems to support this tech push, right? GDP growth forecast isn't huge for 2023, about 0.2%, but the stock market's done well, up 6% in the past year, 34% over 5 years. Plus, the government's pledging a $30 billion tech stimulus. That's a clear signal. And we're seeing new Korean names pop up on the list too, right? Like SK Square, Krafton the game maker.
And Hanwha Group, yeah. They have big ambitions in aerospace, defense, even autonomous weapons. So it's diversifying beyond just the established giants.
Okay, so we've covered a lot of ground here, from the giants at the top to regional shifts and industry battles. So wrapping this up, what does this deep dive really tell you, our listener?
Well, it clearly shows these ongoing, pretty deep shifts in corporate power. It highlights surprising differences in growth and decline between regions, and it really underlines how the definition of value itself is evolving, especially between, say, traditional finance and these tech-driven companies. Exactly. And why this matters to you is, well, it helps you understand these global economic undercurrents. It can point towards investment opportunities, or just help you track the big industry trends reshaping things. It really encourages you to think critically, How do these company movements reflect bigger changes in society and technology, and how innovation keeps changing the game, sometimes in ways we didn't quite expect just a few years back?
So here's a final thought to chew on. You've got these established financial titans, right? Then the super fast moving tech sector, and now these surprising new players merging from different corners, bubble tea, robotics, you name it. In a world where intangible assets and really specific local market successes seem increasingly important, what does global power even mean anymore? How different might this list look in, say, 5 years? Or 10? What industries, or maybe what entirely new ways of measuring corporate strength will define the next wave of global titans?